So we were towards the end of the session, and yeah, there are just three things that are left. One thing they talk about is SMA. Other one they talk about is the manager contract and fees, and there they particularly talk about liquidity and the fees. And then finally, they segregated the fees in terms of the base and then the performance link fee. That's about it. When it comes to SMA,
Yeah.
so SMA has been given by, it's been represented by separately managed account basically. And by the name you can see it is little different from a mutual fund, ETF, or any other kind of pooled investment. So since it is different from the pooled investment, you can imagine that the transaction cost would be high because it will not be able to enjoy the economies of scale, obviously, right? So, but then the trade-off here is, although the transaction costs are high, but you can get customization, right? Obviously, in any of the products that you see in the market, which is for everybody, you cannot customize it for your own thing. Whatever you see, you will have to buy it. But on SMA, since it is tailored for you, you can always customize it. You will have direct control over it on what you want versus what you don't want, right? Another thing is they are very tax efficient. And the reason being that since they are being designed for you, obviously you know where you can put in your money, whether it's tax efficient products or the products which heavily tax things or tax advantage products. So you can get the best of taxes when you have total control, right? But since these are SMAs and be specific for you, right, you may not be able to redeem so quickly. So redemption is difficult, right? I'm saying there is, so you have a SMA and then you have another category which is called as customized SMA. So basically you can imagine that a customized SMA would be for just one person, right, to a specific customer. Obviously you can see that the trading costs are also high, right? When I say trading cost, you can also imagine this is a transaction cost. All those things are high in SMAs, right? And one more thing is when you do a lot of customization, think about this. So can you say that doing a customization makes your product unique?
Yep.
And kind of a bespoke for you, right? When you do that, think about this. How will you determine what is the right benchmark for your kind of product? Right? Since it is specific to you and it just satisfies your requirement, it will be difficult to find a benchmark. So in these kind of SMAs, you will not be really be able to understand what the manager is doing.
Okay.
Right? Because whatever return that you get it. And there's no benchmark that you can find a comparable benchmark. So you will not really understand what the manager is doing. So sometimes there brings a kind of question whether the return that you saw, did it really over and above any kind of benchmark or not, but you really can't compare. So that's kind of a disadvantage when you use the SMA. Make sense?
Yep.
Let's talk about another one that says manager contract and fees. So one of the things that they mention is liquidity. Right? This is kind of a general overview. We have covered this somewhere else. They say that when you have closed-ended fund, so you can do a intraday trading, right? I'm not sure whether, I think closed-ended fund, did this cover in a CFA level 2, open-ended, closed-ended in ETFs?
I think so. I'm not too sure.
Yeah. No, I just remember. No, it was not covered. Then the reason is that you cleared your CFA level 2 in 2019, right?
Yeah.
And they introduced this whole concept of ETFs, close-end fund
Mm.
and open-end fund in 2022, right? So in fact,
Mm.
when I wrote it, it was not there. But when I was taking one of the sessions for CFA level 3, I realized that they changed it here and there, this and there. So they introduced the whole chapter around it.
Got it.
So just to give you a little bit of background, so closed-ended fund, think about this as in an open-ended fund, telling you in a very nutshell, in an open-ended fund, there's this person who is kind of a, you can say, let's say, fund provider,
Mhm.
and you are directly investing in him as much as you want.
Okay.
The trades are happening once in a day, basically at the end of the day mostly.
Mm.
Okay? When it comes to closed-ended fund, this is this person, and he says that okay, I am going to raise, kind of a raise, right? When it's going to sell something, just hold on for a second.
Yeah.
So when they are asking people to invest money in a product, so let's say
Yeah.
they said that we want to raise 100 rupees,
Mhm.
right? And they start a NFO, new fund offer.
Okay.
So they say I want to raise 100 rupees. So the initial people, and they open it for let's say 5 days or 10 days,
Mm.
right? Now whosoever has invested into this got the units in a way, or maybe you can say got the shares in a way.
Mm.
Now this is closed. Now if you want to buy or you want to invest in this NFO, you cannot do it,
Okay.
right? So what you can do is, now the people who invested into this NFO, only they have the stocks, they have the holdings, right? So in that scenarios, these things go to the exchange.
Okay.
Now the people who invested into this before, they put their stocks on the exchange, and from the exchange you can buy.
Mm.
And they always say that closed-ended funds trade higher, they have a higher NAV, they have a higher stock price. Is the reason because the amount here is limited, and whatever you are buying or selling is from the other people and not from the original fund manager,
Got it.
right? And hence, since these things are being traded on the exchange, that's the reason it gets traded intraday, because
Mm.
that thing treats like a shares now. Is that okay?
Yeah.
Although let me tell you, this whole concept of NFO, the concept is the same, but in real world, at least in India, you get NFOs a lot, and you can see that, right? You can Google it out, what are the upcoming NFOs, and you
Mhm.
will see a lot of NFOs. But effectively, you still don't get, the market is not so exposed that you invest those NFOs over here.
Okay.
ठीक है, अभी भी मार्केट में इतना नहीं है कि वो NFOs भी एक्सचेंज हो जाते हैं, हम वहां से जाके ट्रेड कर सकते हैं, वी कैन नॉट. बट
Mm.
यस
But there are
NFOs,
closed-ended funds in India.
सॉरी,
There are closed-ended funds in India.
yes,
Okay.
100%. Okay, so even if you Google it out, the new NFOs, you will see a lot of NFOs, and they give you a date that the
Mm.
NFO is open from tomorrow for another 3 weeks,
Mm.
and the last date is this much. And then when you enter your money, you will not be able to even redeem. They give, obviously, as I said, they are not able to the people who invest into NFOs, they are not able to redeem with the fund manager, and that's the reason they give you an opportunity to go to exchange and sell it to somebody else.
Mm.
And
Right.
since there are not too many transactions then, and then this is closed, so well, historically, NFOs give you more returns than any other open-ended fund, and the reason is very simple. when the redemptions are low, it clearly means that the fund manager has more power to invest into products where there are no redemptions.
Got it.
Okay. If I have to, if there's a mandate that any person can redeem anytime, then obviously I will also have to invest some of the securities in liquid instruments where people can come and redeem. Okay. But if I know that the redemption is not allowed, then I can always invest into some strategy, let's say arbitrage or maybe distressed securities or maybe private equity, right? Which is obviously for long term, but can give me more returns. All right. They say when it comes to liquidity, the liquidity in hedge funds is also low.
Okay.
Right? And they give you that there is something called as hard lock, and all of those things when you get into a hedge fund. These are the kind of features that can be added, right? So hard lock is, it just says that there is no redemption possible. And then you can have a soft lock. Even you will see soft lock in our mutual funds as well. Do you see? For 1 year, 1% exit load. After 1 year, no exit load. Right? So kind of a soft lock where you can redeem, but it comes at a cost.
Got it.
Right? And then there's something called as gate, where they say that you can redeem, but up to. So they give you a limit. Think about this as if you invest into PPF, right? So in PPF, they tell you that for first 5 years, kind of a hard lock, where you cannot redeem at all, right? And then for another, so PPF is usually for 15 years, right? And then they give you a calculation that after 5 years, from the 6th year onwards, you can always redeem, but they have a rule that okay, the 3-year average, it should be this much. So they give you a lowest of the, or 50% of the 3-year last 3 years average or something, right? So that's kind of a gate. So you can redeem, but there is a condition, right? And when it comes to private equity or maybe VC, they have the lowest liquidity.
Yeah.
You understand this, right? And again, usual the average life is 10 years, right? And when it comes to limited partnership, again, limited partnership also have long term, right? And so again, the liquidity is low, right? It's just that they also say the key disadvantage of limited partnership terms include the impaired ability to change portfolio allocations in response to changes in the market, right? So it says when you get into limited partnerships and you have a portfolio manager who is kind of a general partner who is investing for you for a long term, sometimes you feel that market is moving in a way where if I would not invest into where I have invested right now and invest my money somewhere else, then I could have earned more money, right? Did we feel it sometimes that?
Can you repeat
okay,
this? Can you repeat this? Can you repeat this point?
Yeah. I'm saying that as a limited partner, when you have a general partner, and they mostly invest into private equity and venture capital, where the time duration is 10 years.
Yeah.
Right. Sometimes it just gives limited partners a feeling. So the advantage here is obviously when you put it for long term, the chances of getting more returns are higher and redemption is lower. Right. We understand this. But they say this another disadvantage is since you invest your money for such a long duration, sometimes it gives you a feeling that if you would have invested your money somewhere else, because in 10 years a lot of things change,
Yeah.
right? Sometimes you feel that all the PSU stocks are going up,
Hmm.
right? The reason कुछ भी हो, right? उन companies की उतनी worth भी नहीं है, but people have minted money.
Hmm.
So sometimes they feel that, okay, I could have invested this whole chunk of money somewhere else as well, because it's such a long duration. I could have earned more money, but in such cases, that's not possible. So that's kind of a disadvantage, because you can imagine that 10 years is a very long time,
Hmm.
right? Investing something for 2 or 3
Yeah.
years is a different thing, but 10 years, a lot of things change, right? So that's kind of a
Hmm.
disadvantage, that when you invest into these kind of products, you will not be able to get your money back in between. So that's kind of a it's kind of pros and cons. So this comes in as a cons.
Got it.
Okay. Okay. Lastly, when it comes to SMA, right? I'm calling this product as a customized product already. So if it is customized product, so obviously the investor would know the needs of, or the need of the liquidity with time.
Hmm.
So if you really plan it well, obviously you want to create a product that will allow you to redeem your money at the right time. So there is no problem with liquidity in SMA, because
Okay.
when I am going to create the product, when I have total control over the product, so even I would know how much money am I going to need in another 6 months or 12 months or 18 months.
Hmm.
And accordingly, I can allocate the money in such a way that I will be able to redeem that money in that period of time.
Okay.
All right. One thing that they also mention over here in your books, that when it comes to um, what do you say, mutual funds, basically liquidity is done. I'm referring to management fees now.
Mm-hmm.
When it comes to mutual funds, how does the manager earns? The manager earns on the AUM,
Okay.
asset under management, right?
Yeah.
So if you ever invest into a mutual fund, you would see that if you invested your 10,000 rupees, so it gets invested 999.90,
Hmm.
right? So it says
Yeah.
you got XYZ units worth rupees this much, which means 10 paisa goes to the management fees,
Mm-hmm.
and we call that as an expense ratio. And that's the beauty of investing into large funds, is because since it gets into kind of an economies of scale, 10 paisa doesn't harm at
Hmm.
all. And while this 10 paisa multiply, right, 20 crores is a huge money for him, right? So
Yeah.
I'm saying the bigger motivation of a manager is to just increase the overall fund size, because as the AUM increases, his management fees increases.
Hmm.
And it is advantageous for investor as well, because the expense ratio that you see is too low, that it doesn't harm.
Hmm.
But there is also a flip side to it. Flip side as in, although the manager should earn, so should put more efforts to get the better returns, but there's no motivation for them in a way, because if you have a very big AUM, just
They
by
learn from
maintaining
management fees. Yeah.
yeah, just by maintaining that AUM, they can earn a lot of money,
Hmm.
right? And if you, and you also see, right, on mutual funds you do not have any kind of a performance fees.
Hmm.
Whatever return that you get, it's your return. It's just the expense issue that you are paying every single time. So even they don't have a motivation to do something great, as long as they can maintain the AUM, they are still getting a lot of money on yearly basis.
Hmm.
And I hope you see it from your CFA level 2, that you invested your 100 rupees and it become 110. I'm not really saying about performance for now and the returns on the performance.
Mhm.
I'm just saying for the first year, since you invested your 100 rupees, so you give, let's say, 1% as the management fees. The next year it become 110. So you are paying 1% on 110 and not on 10.
Mhm.
राइट. सो अगर सोचो ना, अगर वो 100 रुपए का 100 रुपए भी रहेगा तो उसको 1 रुपए तो हमेशा आता रहेगा.
Mhm.
Right. So the point is, so the only idea about AUM and these things is that they only have to maintain the AUM and they can still earn a good money. Okay. But
Got
now
it.
let's just talk about in case they have something pertaining to the performance fees. Right. Let's see how that works. So they say that there are 3 types of performance fees. First is symmetrical structure.
Okay.
The name itself explains that the structure is symmetrical, which means the manager will be responsible for both profit and loss. If the manager is going to share the profit with you, he is also going to share the loss. Second one, bonus with full upside and limited downside.
Mhm.
Right. So they say that the fees is greater of base plus base plus positive performance.
Okay.
So what does
Got
this
it.
mean?
Basically, you have
Correct
to
me if I'm
return
wrong, right?
back at least the capital and
Yeah.
then the
So
profit.
if you invest, so if your 100 becomes your 110,
Mm.
तो 1 रुपए तो उसने लिया ही 1%,
Mm.
and let's say this is 120, basically 1% management fees, 20% bonus. So he will get 2 over here as well. So
Mm.
1 and here 3. Can you see that?
Mm.
So initially he got 1 rupee over here, and when
Yeah.
it becomes 110, on the 10 rupees he get another 2 rupees. Right? But if
Wait,
your
why 2
100,
rupees? Can you explain this? 2 rupees, why?
yeah. So from 110 minus 100 is 10 rupees,
Yeah.
and 20% on 10 is 2 rupees.
Okay. He doesn't have to make 210. He just has to make 110.
Yeah. So this is initial value, this is final value.
Okay.
Beginning of the year and end of the year.
Okay. Do
If your
mutual funds
100
do
rupees
this?
become 110. Sorry?
Do mutual funds do this or no?
No, they don't.
They don't.
No. In mutual funds you don't have. This is mostly, this 220, but these structures comes in hedge funds mostly.
Yeah.
Right. So I'm saying, so mutual funds का तो हो गया अभी, उसको तो बस अपना AUM maintain करना. That's about it.
Mm.
अच्छा. So I'm saying, yeah. So यहाँ पे ये हो रहा था कि if from 100, if it becomes 110, so the manager will get 1 rupees initially plus 2 rupees as the bonus, and he got 3 rupees.
Mm.
Right? If 100 becomes 90, then he gets 1 rupee initially plus 0 rupee performance, so it's 1 rupee. Right?
Yes.
In the first case, he got 1 rupee, but then he had to give 2 rupees. Right? So he gave 1 rupee effectively. Can you see that? When I said it's a symmetrical structure, so 1 rupee that he get as the management fees, but 20% on 10, which is 2 rupees, it's a loss. So effectively it is 1 minus 2 is equal to minus 1. Is that okay?
Yeah.
In this one,
Mm-hmm.
either he get 1 plus 2 equal to 3, or he get just 1. He's not going to bear the loss.
Got it.
That's the reason I'm saying this is a bonus with full upside plus limited downside.
Hmm.
Which means you are not sharing the loss. And lastly, is your greater of, basically you have a limited upside plus limited downside.
Hmm.
And then it says it is the max of base or base plus profit, but up to a limit. Okay. So the point I'm trying to make is that they say, okay, I'll give you 20% profit, but
Hmm.
just say you see your cashbacks on Swiggy, 50% cashback up to 75 rupees.
Got it.
Right? So you're ordering a food worth rupees 500, and then it gives you 50% off, and you said, oh, 250 ka padega. But when you go to the checkout page, you realize that it says 50% off to 75. So you still end up paying 425. Right? So it says that this is kind of a plan where they're okay to share the profits, but up to a certain limit. Right? I just want to show you something so that it doesn't intimidate you that, okay, what that is. Can you see that? They give you a call option, but it just to show that if this is the base amount that he is going to get, the manager is going to get, right? In the second option where he is not willing to share the loss, and the structure is such that either he'll get the base with the full upside. If the profits increases, his share increase, but if there are losses, then he is still going to get the base, right? So can you say this is something called like this, where he's going to get the base, but the moment he start performing, right, his commission or the performance fees is based on the profit, so he has a infinite upside.
Yeah, he does.
And how about this one? When he also has a limited upside. When I said that I can give you profits, but up to something, right? So he has a base, his profit starts increasing, but then up to a certain limit, and then saturates. So we say that he has a limited upside as well. Is that okay?
Yeah.
All right. Then they also talk about this. Let's just look at this together. Can you see that? In this structure, they say that the standard fees is 0.5%,
Yeah.
base is 0.25, sharing is 20%, break-even active return 1.5, maximum annual fee is 0.7. Let's just try to understand how they work. They give you some returns that if your return is less than 0.25, let's try to understand. If it is less than 0.25, your base fees is 0.25.
Yeah.
So you will always have to pay 0.25 at least.
Yeah.
Your active return, so you got this much return and you paid this much amount already. So your net active return is 0. All right.
Yeah.
Look at the second one. You got a return of 0.1.5. So in this, you will have to pay. Acha, how does this build fee 0.50?
This is 0.25 plus the profit above 0.25.
Perfect, right? So 0.25 as the base, and then 20% profit on this, right? Now look at this. How about this one? If you do the calculation for more than 2.75, you would realize that 0.25 plus, let's say it says more than equal to, so basically it could be 5% as well, or 10% as well. But the fee structure also says that the maximum annual fees is this much.
Got it.
Right now, this is kind of a the last plan where the upside is limited for the manager. The upside is limited for the manager, right? And the reason being that now no matter if the manager is going to give 10% return or 15% return, the maximum annual fees that he can ever get is 0.7, right? So sometimes they give you an option, either you can follow this structure or there's a standard fees of 0.5% every single time, and then I'm not gonna look at the performance fees at all, right? So that's another way to look at your fees, where they say that either you can choose an option which is 50% standard, well, 0.5% standard, where I'm not going to charge anything in terms of bonus, etc., or you can follow this plan where your returns could look like this somewhere. Okay? And again, that's a trade-off, because if you can select 0.50, so you will benefit here, but you will at a loss over here. Okay? All right.
Yeah.
Let's just quickly about the first one.
Which investment? Private equity. Which of the following fee has no impact on the volatility of a portfolio's net return? Management fees only.
Okay, good. There are two questions, but let's just try only one.
Fund X earns 3% gross return for the year. The computed management fee is equal to base fee of 2% plus 20 risk.
You will have to use your phone, etc., to calculate this number.
The share is based on return net of base fee. So it's 2.2. Oh, there's only three options. Yeah, okay. So it'll be 2%.
How?
He just makes the base fee. He would actually have to make 4% to get any profit sharing. Or maybe I didn't understand.
Fund X earns a -3% gross return.
Oh, -3. -3. Okay. I thought 3. 1 second. He earns 1%. A.
Okay, good. Okay. Sure about these things? So you have a similar question? It's fine. You can do it. I know. All right. So with this, we wrapped up our session on performance. Let's just talk about, you said, right? Which one was that? Asset allocation with real world constraints. Let's focus on that. So it's fairly easy topic. So I think 90% of the 95% of the time I would only be speaking while you will just be listening. Purely theoretical concept, but not at all difficult concept to understand. Let me start off with the basic structure, and this is going to help you somewhere. Do you let me just ask you this. When I studied, there was a whole topic named as behavioral finance.
Yeah, they don't have it now.
They don't have it?
They have it, but it's not like it's separate topic.
Okay. And is it a part of this topic only or somewhere else as well?
That I'm not sure.
So I'm assuming let me just give you some background on that, because that also is being used somewhere in this, and you will find this topic very interesting. So the way it works is usually whenever you start doing some kind of investment, right? So so people don't just put their money to the portfolio managers, right? There are multiple rounds of visits, and then they speak to the manager, and more than you think, our versions change a lot. While we think something else, we do something else,
Hmm.
right? I always used to say this in the class कि जो इंसान है ना वो एक विचित्र प्राणी है,
Hmm.
कहता कुछ और है करता कुछ और है, right? And it's easy to blame immediately.
Hmm.
So the point is that you are an individual and you can always change your instance, ठीक है? And you can always say मैंने तो ऐसा बोला ही नहीं था,
Hmm.
गलती तुम्हारी, तुमने गलत समझा, right? So as a portfolio manager, my job is to first document everything, and second, sometimes it's also important to understand whatever the investor is saying, does he really mean it,
Hmm.
right? It's like this. Everybody talks about I want to earn good money, right?
Yeah.
Sometimes I have a cousin, and he always speaks to me कि अंकुल कहीं पैसा लगवा दे, right? And I said, he said, how much return can I expect?
Yeah.
I said, there are mutual funds, there are stocks that can give you 35% return, 40% return. He said,
Hmm.
हाँ हाँ उसी में लगा दे. But are you also willing to lose all of your money? He said, डूब जाएगा क्या? डूब भी सकता है क्या? अरे क्यों नहीं सकता?
Hmm.
डूब तो सकता ही है ना? He
Yeah.
said, नहीं नहीं, मैं बोला रिस्क कितना ले सकते हो? रिस्क तो मैं ले लूंगा, पर डूब थोड़ी जाएगा.
Hmm.
So can you see the two versions here? He is
Hmm.
saying that he's okay to take the risk, but in his heart, he is assuming that the money cannot go down,
Hmm.
right? So that's something that we need to document, we need to understand. But then these things are not that are being said theoretically. It's important that we categorize them under some rule so that we would know what we are asking. And
Hmm.
that's the same thing that we can check with the investors, right? So in the IPS, we talked about a few factors that is being given by R, 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 T, T, L, L, U. Okay. Have you studied this anywhere?
No.
Okay. So first R, let me just light about all of these things. R is return, risk, time horizon, tax, liquidity, legal, unique, right? So let's talk about the first one, return. It is important to check with the client what is the definition and the objective of the investment. And you will be amazed to know, I always used to think that in India, nobody wants to understand the requirement of the clients. You go to any office and you say, I want to invest. They tell you blue chip mutual fund. अरे भाई, उसे ब्लू चिप चाहिए नहीं चाहिए पूछ तो लो, उसकी रिक्वायरमेंट क्या है पूछ तो लो, right?
Hmm.
But then the flip side here is I came across somebody 2 weeks before, and she called me because again we are into real estate business. So
Hmm.
she called my dad and he said that she has around 1.5 cr that she is looking to invest, right? And she doesn't know where to invest. So I
Hmm.
told my dad that she is a perfect client for me. Let me handle her, right? And I just told her, "Ki I'm gonna have a call with you, and I work with my dad. And first of all, I would want to understand from you what is your objective, what do you want to do, and then we'll take it from there. We have so many products that we can offer, but then before that, I just want to speak to you about your thing." She said, नहीं नहीं वो सब नहीं, मुझे तो बस एक ऐसा बताओ जहाँ मेरी रेंटल इनकम आ जाए, एंड मुझे ज्यादा ऑप्शन नहीं चाहिए. मैं बोला, आई गेट योर पॉइंट, इट जस्ट दैट आई वांट टू स्पीक टू यू सो दैट आई कैन अंडरस्टैंड व्हाट्स योर ऑब्जेक्टिव एंड हाउ मच टाइम डू यू हैव. ऐसे बस उसको लिख के चैट में दिया. And then from then she is not even picking up my call. I don't know whether she got scared कि अरे क्या पूछ लेगा, हमें तो पता ही नहीं है, right? Sometimes while we think that we are offering something great to the clients, at least in India, उनको ज़्यादा वो पता ही नहीं कुछ, ठीक है? And that, and in fact they don't want to explore a lot. And there's another client to whom I was talking. I said, look, I can get your money invested somewhere, and we charge 2%, and then I'll charge 20% bonus. He said, वो सब मुझे पता नहीं, मैं 25 लाख देने को तैयार हूँ, कमा के दे दियो, मुझे इतना दे सकता है. Right? So sometimes I feel that whatever studies that I think of might not work in India, might not. Right?
Yeah.
But the overall thing is that in terms of return, it is important to understand what your manager is thinking. My wife thinks that if Ankur is going to invest somewhere, I should get at least 50%. So you need to educate your investor. Okay? And then she invested into NBCC, and I asked her to sell it. Sorry, NTPC, and I asked her to sell it. From that day, I have been listening every day कि मेरा लॉस करवा दिया, वो प्राइस इतना बढ़ गया उसका. ठीक है. And जो मैंने बोला उसको बेच तो उसने नहीं बेचा, उसके लिए why didn't you tell me to sell it? So you will understand this in a few years when you will get married. So no matter what you do, you will always be the one who will get blamed.
Yeah.
Right? But then jokes apart, they always ask about that what kind of return are they expecting, right? In terms of return, there are a few things. Either is it absolute return? Again, if the client says that they're looking for absolute return, let's say 10%, okay, I understand it's reasonable. But if the client says that they are looking for 50% return, you need to educate them. Right? You can't be just writing whatever they say and come back, because when you say that, okay, it means that you comply, that you will be focusing on getting 50% return, which is non-achievable at any cost. You look at any mutual fund, they give you, if you look at the 5-year return, you will realize it is around 20%.
Got it.
Or maybe less than that. So anything it is, if it is between 5 to 15, I can still think that can be achievable. Anything more than that, you need to educate. Second is relative return. Right? If it is relative to some benchmark. So I understand, okay, if you are referring to S&P 500 or Nifty 50, I'm here to beat the benchmark.
Yeah.
Is that okay? Return is done. When it comes to risk, this is the most important part. Most important. Right? Risk has two legs. One is ability to take risk, and second one is willingness to take risk. Most of us, I think 90% of us, have the willingness to take risk. Right? Willingness is being depicted by what we think.
Okay.
When you read the question in your CFA Level 3, if one of the statements says, I don't know what the fuck, obviously you're not going to see that, but everybody is earning from technology, while I am not. What does that mean? He is willing to invest in technology. Everybody is talking about stock market these days. Why is it that I'm only investing into funds, mutual funds kind of thing? Right? IPO is a hot cake these days. My grandmom also earned from stock market. Can you see that? all of those languages shows that everybody else is earning, why I am not earning. Can you see? The
Mm.
willingness is too high, right? But on the other side, you are earning 1 lakh a month and your expenditures are 90K.
Mm.
Your ability is low,
Yeah.
right? And then there are people who have a lot of money. My wife is in a government job and her expenditure, overall monthly expenditure, is not more than 10K.
Mm.
There's no expenditure at all, right? So I tell my wife, why don't you put your money somewhere in some products?
Yeah.
And she says, this is my hard earned money. I'm not okay to lose. I said, मैं भी कोई drugs नहीं बेचता. ये
Yeah.
भी hard earned money है. But whatever you are getting in the bank account is not sufficient while you can earn good money.
Yeah.
And नहीं नहीं बाबा मुझे डर लगता है, मुझे कुछ नहीं करना. I like to see in the account,
Mm.
which means her ability is high, but willingness is low,
Mm.
right? So I can say I can create a small matrix where I say that if the ability is high and the willingness is high, your risk appetite is high,
Mm.
right? Where your willingness is high, but your ability is low, right? In that case, and if your ability is high, but your willingness is low.
Mm.
And the last one that you can see is ability is low and willingness is low, the risk
Mm.
appetite is low.
Yeah.
This is clear. Now,
Yeah.
in the two situations, if your willingness is high, but your ability is low, your actually the risk appetite is low,
Mm.
right? And if your ability is high, your willingness is low, then you can always educate your investor
Mm.
and your risk appetite is actually high.
Got it.
क्योंकि आप किसी को समझा तो सकते हो, हालांकि हालांकि a lot of different things, a lot of different places you will see that it is not you get average here. The risk
Mm-hmm.
appetite is average, right? So you can always see the question of is it somewhere in between, or they're trying to say that they have lot of money.
Mm.
If you believe that they have lot of money that are not being utilized, then you can say that the risk appetite is high, this case, right? But
Yeah.
and if you see that the ability is too low, then you can say the risk appetite is low, but otherwise you can say the risk appetite is moderate. You can also use that,
Okay.
right? But the idea here is that if the willingness is low, you can always educate your customer. But in this case, even though the willingness is too high, you cannot increase the income.
Mm.
If the expenditures are too high and if he doesn't have extra money with himself, there is no way that you can increase the money. And if there is no money, he will not be able to take the risk
Got it.
at all. The idea is to preserve the money and not to invest the money.
Mm.
Okay? Again, risk appetite is the most important, and every other factor that we're going to study will be linked to the risk appetite. And I'll show you how. Time horizon.
Yeah.
Time horizon says you have a short time horizon. It means you can take less risk.
Mm.
You have a longer time horizon, you can take more risk.
Mm.
Simple.
Yeah.
Even the liquidity, if your liquidity requirements are high or your obligations, so you will get the whole question of I have two daughters, one is 16, another one is 14, right? So the one who is 16, she'll go to her college in another 2 years,
Mm.
and then the one who is 14, she'll go in 4 years. So I would want $200,000 in 2 years and another $300,000 in another 4 years. Right? And I work here, so I have this much of money. I'm being taxed at this much amount, and I have other car loan and then home loan at this much. So you need to do the whole calculation. But the point is that since you have an obligation for in 2 years, you also want to ensure that you are not going to put all the money for a long-term investment, but you need to put in money in products that can fetch you returns in 2 years. Again, when you are redeeming your amount in initial 2 years, obviously you will not be able to invest into some risky assets.
Sorry.
Right? So if the liquidity requirement is high, in that case, your risk appetite is low, and you will have to invest into some liquid instruments.
Yeah.
Okay. When it comes to tax, so we as in the CFA says that we are not tax. What is that word? Basically, we are not proficient in tax.
Okay.
Right? So we usually say that when it comes to tax and legal, we usually say that please consult the expert. We are not tax experts. Okay? The basic rule goes by that if the requirement is to have a tax efficient, then you can look at tax advantage products. So basically the idea is that if you have an investor who is heavily being taxed already, then you want to invest his money into tax advantage products. And if he's in a low bracket of tax, then you can invest into money into taxable products. That's a basic that we offer. Anything complicated, we say that, okay, let's just talk to the tax expert, because CFAs are not tax experts.
Yeah.
Okay. When it comes to legal, again, we just says that always follow the local laws, basically the stricter of the two or the three. Right? You have studied this in ethics.
Yeah.
So look at the local laws and then look at the global laws. So which one is the stricter, follow that. Again, anything beyond that, we are no experts. And the last one is unique, right? There are certain things where they say that, okay, I have a lot of investment in real estate, right? My 90% of my investment is in real estate. So this is something that we need to know, right? Because now any investment that I'm going to do for rest of the money, it can never be in real estate, first. And second, if get a chance, then I would want to liquidate this somehow so that his portfolio is balanced. Or maybe the portfolio manager can say that I am okay to deviate this much amount for an IPO or for some tactical solutions, or maybe anything that is unique to the client that he would want to mention, that comes in the unique. We write all of these things down, we document, then we share that with the client, and that becomes the first and foremost thing of an IPS, and then we follow the IPS.
Got it.
Right? That's the reason this RRTT LLU becomes the most important part of IPS, because whatever we're going to decide over here, we'll just follow this. And the day the client comes back to me, what the fuck, everybody's earning more while I'm not earning more, I'm just going to show this, that look, we decided that we're going to follow this, and I cannot really move around without this.
Got it.
Okay? Now, on the same lines, they talk about the asset size.
Okay.
Not really on RRTTLU, but then when it comes to investment, they talk about the few problems that we see. Now think about this. I got this IPS. Now my objective is to go back and invest into products that will satisfy these criteria. Right? When the manager says that I want to invest and I want to get 15% return, so I also have to see what are the different products that can provide you 15% return.
Yeah.
Right? Now think about this. Do you see when you invest into, let's say, a mutual fund, they say that the minimum investment is 2,500, right? And sometimes they say minimum investment is 150, or minimum investment is 500 rupees. So there are different funds in which they have a prerequisite of a minimum amount.
Got it.
Now, this mini amount, 150, 200, 500 looks very cheap, very small to us because of the large fund size and because of the economies of scale. But let's say you have a good investment,
Hmm.
there is a good investment product where the minimum investment is 1 CR,
Hmm.
right? 1 CR. While your asset size is only 30 lakhs.
Okay.
While you think that investing into this product is an excellent choice, you still can't invest into it because you do not meet
Yeah.
the minimum requirement criteria, right? So we are talking about the real world issues of what we see. Although it's easy to say that okay, I can invest into this and then this product can give you this much return, but in the real world, sometimes there are issues that tells us that no, it is difficult to invest into this product. So what you can do is you can do some kind of a commingled investment account,
Okay.
right? Commingled investment account. So what you do is you look at other people of the similar style.
Yeah.
Let's say they are also willing to invest into this product, and let's say they have a size of 50 lakhs,
Hmm.
another one who has a size of 20 or 30 lakhs maybe. Together as one account, you can invest into this.
Got it.
Right? So it says that when you have an asset, there are in the real world there are asset size issue where you want to invest into some products, but since they have a minimum requirement which you do not satisfy, so you will not be able to invest. In that case, you can do a commingled investment account and then you can invest.
Hmm.
Other way around, other way around, sometimes your fund is too large, and let's say you want to invest into a small cap fund,
Hmm.
right? And this also happens even with me. You go to any mutual fund, you try a small cap fund, while a large cap fund or other funds do allow you to invest 10 lakh rupees immediately as a what do you say, lump sum amount.
Yeah.
But if you look at that, a small cap fund, most of the small cap funds, most of them, they said that you can invest only 25,000 per month per pan,
Hmm. Hmm.
right? And this has happened with me.
Hmm.
So I didn't know this. So I was investing, I think 2,000, I think 15,000 rupees per month, or maybe 10,000 rupees per month. I don't remember, for a few years. And then there was a time when I redeemed everything
Okay.
because I wanted to buy something. Later, I sold something else in the market and I got good money. So when I
Hmm.
got that money, I thought, okay, let me go back and invest the whole money in small cap fund because that was a fund that gave me the maximum return.
Yeah.
When I was entering 10 lakh rupees over there, it just showed that you can only invest 25,000, that too per month, per pan. So I
Hmm.
realized it was easy to redeem, but now I'm not able to invest.
Okay.
And that was the only product that was giving me the highest return. But then there are problems.
Got
Sometimes
it.
your fund is too big and the size of the target fund in which you want to invest, it is too small. So even that is a kind of issue that you see,
Got it.
right? Next one is, shall we continue? Is it going fine? Or
Yeah. Could we halt? Is that okay? Just
sorry,
pretty.
could be.
No, no. Could we pause? I'm pretty sick.
Okay,
That's
you want to pause it here?
yeah.
All right. So there are two things, Gaurav, and up to
Yeah.
you. I'll leave it up to you. Maybe since we are already in sync for now, and it's more
Hmm.
about the theoretical portion, I can cover for another 20, 25 minutes, and then you will just have to extend for half an hour on Wednesday or whatever it is. And if you say so that you are not feeling good, let's just do it on Tuesday, Wednesday, whenever you say, then obviously we can do it in a 3 hour session. We can let it go.
Okay. Can we do it next week? Sorry. Yeah.
Next week? Okay. So tell me a day today.
Yeah.
Is it going to be Wednesday?
Yeah. Wednesday only. Perfect. 1 hour.
Okay. So it's going to be Wednesday. 7 to 10, or shall we start a little early?
Yeah, we can start early also.
Yeah, put in more alarms. At least it's just for a day.
Yeah, absolutely. No,
Right?
my fault that we can't do this. So
Put it-
definitely. What time?
So maybe 6 to 9, if you say so. Or
On
maybe
Tuesday.
6 at 9:30.
Yeah, okay. Let's do
Right?
that.
Okay. So on 23rd, 6:30 to 9:30, I'm gonna
Perfect.
cover this whole session, and the rest of it, I'm assuming that it will take around 1 hour, 1 hour 15 minutes max.
Hmm.
Right? And for another, I'm assuming 1 hour 30 minutes max. So another one and a
Mhm.
half hour, let's just focus on fixed income as much as I can.
Perfect. Thank you.
Okay.
Thanks.
So let's just regroup on 23rd, and then we'll take it
Yeah.
from there. All right, Gaurav.
Thank
Thank
you
you.
so much.
No worries. Bye.